Thank you. So my name is Juan, and I'm going to tell you a little story. The world of work is changing. 20 years ago, our youngsters would work at the franchise like McDonald's to get their first job, to get the first skills, the first source of income. Today, those people, 18-year-olds, they're creating their own micro-franchises. They work for Uber, or for Etsy, or for Airbnb, and they find different ways to achieve that first income, those first skills, that starting point in the labor market. This opens a question around transferable benefits. Transferable benefits is going to be critical over the next few years because over 40% of the workforce in the US is expected to be freelancer by 2020. We're talking about the freelance generation. You can call it Generation Y, Generation X, whatever. The real impact is going to be that they will be freelance and they will work at many different things at the same time in parallel. Now, when we started Traity, we thought about the problem of reputation as a form of transferable benefit that would allow people to use that reputation in many different jobs. But as we developed the proposition, we realized that reputation is really in itself a form of measure of risk premium. And when you're measuring risk premium, you're automatically talking about credit scoring. Now, let me tell you the story I mentioned earlier. I moved to the US about 7 months ago, and the first time I needed a credit score was the very first day I arrived. The reason for that was the landlord I talked to rent the place wanted me to do two things. Firstly, he needed a $14,000 deposit. When you think about the deposit, that's a very inefficient form of insurance. It's freezing my money just for everything that I could do wrong with his property. The second thing I needed was a $40,000 bank guarantee. Of course, I didn't have a credit score, so Bank of America was not going to give me that bank guarantee. And I had to get a friend who had been in the US for many, many years to put that liability on his shoulders on my behalf, which is a tremendous pressure on people if you think about it. Now, what I'm going to show you is an example of what we have built with Traity, because what we are doing now is taking that reputation one step further to put our money where our mouth is. In this case, if a landlord says to me, hey, I want you to get a bank guarantee, I can go onto Traity and apply to this flat. When I apply to the flat, the first thing I'm going to do is to identify myself. We have created our own algorithms that, that connect and compare my own face with my identity. So in this particular case, this is an example of Jose, one of my co-founders, who is testing the service for you. This is taking hundreds of frames of his face to have a much stronger correlation with that identity. So this, well, he didn't want to show his ID, so he put a black box in there. So once we have that consistency, and for this we have built a deep learning technology based on papers, the most recent papers from the Toronto University from end of 2015, we go into your social identity. We go into Facebook, and here we look at consistency, what kind of person you are, your comments, everything that you do online. And then we go into Twitter, and on Twitter, our algorithms don't really look at what you follow. We're more interested in who follows you. Because if you have 1,000 followers, and 500 of them speak about insurance, and the other 500 speak about jazz, you might be an authority at both topics. We're looking at authority. We're looking at what you know about. In the case of Google+, well, nobody uses Google+ anymore, so we don't really do it anymore. And then we can go into many other things that show who you are online. On Amazon, we're not really looking at what you buy. We look more at the consistency of where you deliver things. Where is your home? Does it connect with the Facebook city that you mentioned? So we're looking at that consistency online. On many other applications, for example, we look at Uber or Airbnb or BlaBlaCar. All these marketplaces give us a tremendous amount of information in terms of reputation. On Airbnb or eBay, we can learn about what people say about you when you do a transaction with them. So we look at semantic analysis of Airbnb. In fact, we learned that when people say that you're a wonderful guest, you're in the top 90 percentile of guests. When people say that you're a nice guest, you're in the lowest 10 percentile. Even though it sounds like a good word, when you compare with millions of other people, it shows tremendous inference of what kind of person you are and how you behave. Well, in the case of LinkedIn, for example, we don't really look at what you say about yourself on your profile. We look at your network. So if you said that you studied at Harvard, but you don't have any friends from Harvard, that's going to look dodgy. And we don't believe that. We look at the network around you. Even more important than that is what we call the network of trust. In this example, it's a new user. He has 0 trusters. A network of trust is a concept I'm going to explain. If you don't mind, Lara, stopping this for a second so I can go into that. The most clear network of trust that I understand is what Mohammed Yunus did in Bangladesh, for which he got the Nobel Prize in 2009. When you think about what he did, he was giving microcredits to women who had no collateral whatsoever. The collateral was the people in the community. Now, what does this mean? What this means is that if the person didn't return the credit, the interest rate was going to increase for everyone in the community. Now, think about what that means in terms of peer pressure. It means that it's not just about me being in a blacklist. It's about me affecting my friends. And that has tremendous implications in terms of how trust has moral and altruistic implications in the level of risk, in the level of that network of trust. And what we're trying to do with Traity is what I call a network of trust for the world. So I can recommend my mother, and even though she might not have eBay or Airbnb or Uber, I'm passing her part of my reputation, just like a Google PageRank for people. And what that allows is for my mother to be part of that economic graph and to be able to be part of the system. I'll give you a quick example. In India, the typical landlord requests 9 months of deposit to tenants. Now, what that means is that if you have a rural Indian guy who wants to move from the farms to Bangalore just to work at the contact center, this is a tremendous limitation to move, a tremendous limitation to improving people's lives, to be better, to achieve the jobs of their dreams. So by enabling a service like this, where a network of trust based on social information, based on your network, allows you to buy a service. You can keep going, thank you. It allows him to have that bank guarantee. What that allows the landlord is to reduce or to even waive the deposit. Of course, we know that because these services already exist, but they don't exist for many, many people who have simply no access to a financial identity. As an example from India, over 200 million people have bank accounts, but more than 600 million people have Facebook accounts. If we can enable those 400 million people in the middle to go from not having a bank guarantee because they don't have a financial identity to having a guarantee because they have a social identity, the impact is tremendous. Now, this is only the beginning. I'm very excited to announce a partnership that we just closed with AXA and the program Open Insurance. And I think the AXA guys are somewhere here. Oscar is over here. You can stand up and say hello. Oscar, Oscar. So what we're doing with Oscar is tremendous, and with the Open Insurance program at AXA. The AXA.es website is going to have a login with Traity button that when people click on that, they can start to enter their reputation from Airbnb, from Uber, from eBay, from Facebook, et cetera, et cetera, et cetera. And as they enter that reputation, the price of their insurance will go down. And they can see how that reputation is impacting their price. And that's, the implications are very, very interesting. On the one hand, it enables us to separate the good people from the bad people, especially for new customers, 18-year-olds, people who could be reckless. But even more important than separating the good people from the bad people is the idea that we can elevate people. With the example I gave you about Mohammed Yunus and how it helps everyone be better, because we want to behave for the people who trusted us, because otherwise the interest rate or the premium is going to increase for those people. So the implications are that the future of insurance, in my opinion, is assurance, is prevention, is having people not just separate and pull the good from the bad, is to have all of them behave better and become better because they have the right incentives to do so. The second implication has to do with data itself. Today, the people who benefit mostly from data and from our social data are the Googles and Facebooks of this world, who are doing it without our permission in most cases and in a passive manner. Here, the implications are tremendously different because I am proactively entering my data to benefit from it. I am creating a credit score that I control, that I can benefit from, and where I can see the benefits directly the moment I enter that scoring. The program with AXA, I think it starts in 2 weeks, so it will be very exciting to see how that goes, and then we'll see how the correlations start to come up and see how we can actually improve that over the traditional services. And that's pretty much it. So thank you very much for your attention.